Crypto Market Outlook, week of October 27, 2025. Hey everyone, welcome back to the channel. If you're new here, I'm glad you found us. I break down the crypto market every week with no hype, no nonsense, just clean analysis. Your support keeps this going, so if you find this breakdown helpful, hit that like button, drop your thoughts in the comments, and subscribe so you don't miss next week's forecast. Alright, let's talk about the week ahead. Because after the biggest crypto liquidation in history earlier this month, and with CPI now out of the way, we're heading into a week that could redefine the tone heading into November. Macroeconomic and market context. So, what's the backdrop as we start the week of October 27, 2025? The big headline last week was the US CPI print. It came in at 3.0% year over year, right in line with expectations. That means inflation's cooling but still above target, so the Fed is staying in its wait-and-see mode. No more panic about hikes, but no guarantee of quick rate cuts either. And that's actually good news for crypto. It means macro isn't fighting you right now. The issue isn't the Fed. It's the flows and fragility of the market post-crash. Let's rewind. 2 weekends ago, crypto saw the largest 24-hour liquidation in its history, roughly $19 billion in leveraged positions gone in a single day. That came after a wave of tariff headlines, panic selling, and, as usual, thin weekend liquidity. Bitcoin plunged from $125,000 to just over $104,000 before bouncing. Now, heading into this week, the market stabilized. Bitcoin's back around $114K, $115K, Ethereum is holding near $4.3K, $4.5K, and altcoins like Solana and XRP are quietly regaining structure. On the institutional side, ETF data is fascinating. We had record inflows earlier in the month, about $6 billion, and even after the crash, Ethereum, Solana, and XRP still saw net inflows. Bitcoin funds saw some outflows, roughly $900 million, but that's rotation, not capitulation. And regulatory news? Still bullish long term. The SEC's new generic listing standards for spot crypto ETFs mean we could see a wave of new listings beyond Bitcoin and Ethereum heading into 2026. That's real structural progress, the kind that doesn't make headlines but changes liquidity forever. So macro is balanced, regulations improving, and institutional demand hasn't disappeared. It's a cautious but constructive backdrop. Technical analysis, BTC, ETH, XRP, Sol. Let's go chart by chart. BTC's the one everyone's watching. After the flash crash, Bitcoin bounced sharply but hasn't broken back above resistance. Right now, the levels that matter are $117K, $120K, that's your first wall of resistance. $123K, $125K, the all-time high zone. Support sits between $112,000 and $114,000, then deeper at $107K, $110K, where we saw buyers step in during the liquidation. RSI's neutral, MACD's flattening, and moving averages are compressing, meaning the next breakout, up or down, could be decisive. If BTC can close above $120,000 on spot volume, we likely see a push to $125K, $130K. If it gets rejected again, it's probably another round of chop between $112,000 and $120,000. So traders, watch for confirmation, not hype. ETH's story is range compression. After months of grinding higher, ETH is stuck between $4,300 support and $4,900 resistance. That $4.85k, $4.95k zone has rejected every breakout attempt since August. The 20 and 50-day moving averages are right below at $4.3k, $4.5k, that's the line in the sand. If ETH breaks above $4,950 with strong spot demand, we target $5.2k, $5.5k. But if it loses $4.2k, $4.3k, that's your signal the trend's cooling and it's time to step aside. The big tell will be ETF flow data. If those outflows from late September stop, ETH could easily lead the next leg higher. XRP's been the same for weeks, range bound between $2.80 and $3.10. Every time it pokes above $3.10, $3.20, it fails on weak volume. Support remains $2.84, $2.90, with a deeper cushion at $2.70, $2.60. For traders, it's a prove it or lose it setup. We need a high volume breakout above $3.10, $3.20 with OBV rising and spot leading to confirm momentum. Otherwise, it's just ping pong. Sol's structure is cleaner than most. It's still printing higher lows, with a solid base around $1.95, $2.05. The key breakout level remains $2.45, $2.50, a zone that's rejected multiple attempts. A daily close above that range could trigger a rally to $2.60, $2.80. And that's not fantasy. Sol had a $145 million single-day ETP inflow in mid-September. That's real institutional demand. Just remember, Sol trades like high beta BTC, it runs faster on the way up, but it also bleeds faster on the way down. Fundamental drivers. Let's zoom out from charts and talk fundamentals. Bitcoin, the ETF narrative is still the main driver. Those record inflows earlier this month confirm that institutions are here. As long as macro isn't tightening, BTC remains the default digital risk asset. Ethereum, still the most versatile ecosystem, between staking yield, tokenization, and stablecoin infrastructure, ETH's role is cemented. The outflows we saw were more about rotation than rejection. XRP, with full legal clarity in the US and now a fast-track ETF pathway, XRP's fundamentals are stronger than its chart suggests. But until we get that volume breakout, traders are cautious. Solana, still the most active layer 1 outside of Ethereum. Developer activity, ecosystem expansion, and treasury allocations keep it on institutional radar, especially as ETH fees remain elevated. Market sentiment. Let's be honest, the vibe right now is cautiously optimistic. People are still nervous after the $19 billion liquidation, and rightfully so. Funding rates are low, leverage is light, and traders are waiting for confirmation before adding size again. On social media, it's a split crowd. You've got the Bitcoin to $130,000 camp and the one more dip incoming camp. In reality, both could be right, the next move depends on ETF flows and macro headlines. So don't let Twitter drive your trading, let the data do it. And let me ask you, do you think Bitcoin will break $120,000 this week, or are we stuck below it for now? Drop your thoughts in the comments. I love seeing how this community reads the market. Actionable insights, what traders should consider. Here's how I'm framing it going into next week. Bitcoin. Watch for a close above $120,000, that's your buy confirmation. Support at $112K, $114K remains strong, but below $107,000, I'd stay defensive. Ethereum dips near $4.3K, $4.5K are healthy if spot demand holds. Breakout confirmation is $4.9K plus. Anything below $4,300, step aside. XRP only by strength, $3.10, $3.20 breakout with volume. Otherwise, wait. Range trading, this pair burns capital. Solana above $245, $250, it runs. Below $200, reduce exposure. Keep it simple, trade levels, not emotion. For smaller cap altcoins, keep exposure light until BTC and ETH reclaim their major breakouts. Liquidity's thin, and patience pays. Closing thoughts. We're still in a healing market. The crash flushed leverage, the CPI stabilized sentiment, and institutional money is quietly rotating under the surface. If we can hold key supports this week, November could open strong. If this analysis helped you, do me a favor, hit that like button, drop a comment with your market outlook, and subscribe so you don't miss next week's roadmap. This channel's growing one video at a time, and your support helps me keep bringing you this kind of data-driven insight every single week. This content is for informational and educational purposes only. It is not financial advice, and I am not a financial advisor. Crypto is volatile, always do your own research, manage risk carefully, and trade with a plan. Thanks for watching, I'll see you in the next one. Stay sharp, stay disciplined, and I'll see you next week for the next crypto market forecast.